And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you from Westlake Village, California. It's another bright, beautiful, sunny day out here after we got some rain yesterday. And guess what? I'm going snowboarding tomorrow with the kids. So should be a lot of fresh powder up there in Big Bear. If anybody's up there, give me a shout out, say hello while you're visiting this weekend. And let's jump into Bitcoin's price action. We'll take a look at some of the underlying market dynamics and just touch on a few things that we haven't talked about in a while, which one is going to be the Bitcoin dominance, which we haven't taken a look at in some time. And why am I bringing it up? Well, let's look at it on more of a macro perspective on the weekly time frame. And you can see we're at 42% Bitcoin dominance right now. And basically we've created a range low over the last, since May of 21. And when Bitcoin dominance goes down, you expect altcoins to get a little love, as you can see in this nice swipe down. And then vice versa, as Bitcoin dominance goes up, you're gonna see altcoins take it on the chin in general. Because why? What do people do? They liquidate their altcoins to buy Bitcoin. In fact, that's what I heard yesterday. Alameda Research was doing, is dumping a bunch of their Solana through ERC20 token conversion in a mixer into Bitcoin and then back out of the system. So Solana took a bit of a dump yesterday, down 10%. Today, in fact, taking it on the chin a little bit more here, and it looks like a Tesla stock, pretty much. Another one to bring up across the interwebs here, well, Microsoft in a nice little downtrend here. Tesla getting knocked on the chin, and here's the kind of long-term macro target. Probably going to get a bounce here first, but once you break this region, any kind of drive upwards here is just another lower high, and you expect more downwards continuation for Tesla. Okay, unless we get some major news-driven story, and there is a bit of a gap there, so that could be filled at any moment as well. Okay, moving it back on. So Bitcoin dominance I was talking about. All I would say is over the next 12 months, I would expect Bitcoin dominance to continue its way onwards and upwards, meaning the majority of altcoins are not going to perform well against Bitcoin, and that is in their Satoshi pairing, which is the Bitcoin pairing for the altcoin. So needless to say, when Bitcoin dominance gets way back up here around 63%, we're going to start looking at more altcoin activity. Because then what do you expect? Well, when we come up to a major, resistance area, that's where you should get some selling pressure and then perhaps come back down. So only time will tell here, but at the moment, several drives of hidden bullish divergence, and I'm expecting a shot at minimum back to the top side of the range. Okay. That's it for Bitcoin dominance. What's the other major one? Total market cap. And these are a little bit more on the, bullish side. These kind of indicators for Bitcoin, at least not in their Satoshi pairing, but this is total market cap. We did lose a significant critical region, and looks like total market cap wants to come down a bit more. Total market cap is going to be crossing up from a low level on the weekly time frame as long as we can hold above 772 billion. And currently we are below there, so stocks will cross back down as volatility is increasing. It does look like this is a Wyckoff accumulation, any kind of a break below here, and total market cap comes down to 500 billion. So we've come all the way down from $1 trillion, 2 trillion, down to $1 trillion, and we're at about 750 billion. So off the total market cap, we have shaved in the cryptocurrency land 74% from the high. So, and as you can see, we're coming into this resistance area right here. Could get a bounce, But if this does start to break down, and Stokes turn back down as volatility is increasing, not going to look good for total market cap and the rest of crypto. Okay, back on the Bitcoin. And kind of our macro outlook discussion we had yesterday, kind of what is the macro trend, down, 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 down to doggy town. Oh, by the way, I did have a pretty good trade set up the other day. I'm sure it's been several days past now, but it did hit pretty nicely that day as we did do a stop loss risk management analysis and take profit where that should be. So don't forget to like and subscribe and follow if you want to get some more updates on Bitcoin's price action and what is the most valuable thing you can get from, overall, if you're a newcomer and you're just starting to learn about TA and you want to know, what's the biggest piece of advice I could give you is, come up with an investment strategy for yourself, right? What is an investment strategy is you got to have an entry point, an exit point, and then a risk management point, a failure point. Because at some point, Bitcoin doesn't go up forever and it starts to go down. And you have to kind of know when to give up and, go with the trend, right? Let the trend be your friend till the end of the trend. And when Bitcoin is in a weekly downtrend, I said it from the beginning, right? You expect 12 to 18 months of sideways and down, and that's just historically how it goes, okay? So weekly strokes are crossed up, and we'll cross down here below 16,000 bucks here in the next 2 days and 3 hours. That's for CMEs. Spot price is still angled to the upside, and as I've been saying, this has been flip-flopping around, and if we do cross back down as volatility is increasing above the 25 percentile, I did say, hey, I was leaning towards a little bit more of a bounce going into the first quarter of next year. And I would mediate that with the dollar, right? So I have been postulating this bounce off the dollar for the past couple of weeks. It looks like we're finally going to get it in the first month of January, which means risk assets probably take it on the chin as the dollar does come up here to 109. But as I have been saying, there is monthly hidden bearish divergence, several drives giving us a minimum target down to about $100 in the first quarter of next year. So the question is, a bounce first or not? If the bounce does fail at that 109, 110 region, which is the 618, the 0.5 fib, then I would expect risk assets to essentially party on and party as long as the dollar is going down and we don't get any more like severe economic data blowout, with inflation or interest rates or something in China. A lot of people are hypothesizing China's reopening and that could cause more inflation. I haven't done a deep enough analysis on that yet, so what I do like is to know what the dollar is going to do. And the dollar, again, on the daily, putting in several drives of hidden bullish divergence, prices making higher lows, RSI is making lower lows in comparison to this pivot right there. So as long as the dollar does stay above that 101, this little level right there, then probably gonna hold it. But I could see the dollar coming down as far as about 97, which would be the monthly green 55, So somewhere I want to say, because this will move up over time, right? And these monthly signals can take months and months to play out. It's a very slow thing. You also have Stokes crossing down, and here is one, so a mean reversion bounce. So if this starts to continue to come down, I would expect that to be the case for the mean reversion bounce. As we had this big upswing, when volatility is coming back down, you're going to see price come back down. Okay, that's out of me. So I think, proper analysis going into the first week of, January, which is, if the dollar wants to bounce, then it is going to provide risk assets some downside displeasures. Okay, if the dollar loses this region, goes right back down, I could see Bitcoin actually putting in a massive bear market rally along with the rest of stocks, global equities. But I'll tell you what, this is looking more and more bearish, as we did say. We're calling for this one actually to come back down to the bottom side of the range. Nice trade if you took that one. Even as we broke this little cone or falling cone, whatever you want to call it. We did say, hey, look, because we were saying there's a threat, the possibility of an upside move if the dollar comes down. Needless to say, we got the move to the downside. Now, this is a massive range, and I'll see you in the next one. Have a blessed day. Take care.